Welcome. My name is Rob Fagnan, and I'm going to be presenting on the industrial market, highlighting a few things that took place back in 2020 and where I think the industrial market is headed for 2021 and beyond. But before I get into it, I want to rewind back and take a look at several predictions that were made over the past several years. Up top, things such as mega warehouses making their way into our market, the growth of last mile distribution facilities, e-logs and how they've affected the transportation industry and created a demand for cross-dock facilities and warehousing, the growth of rail in our market, and so forth. Down below are companies such as Flex and LogHub. They're essentially the Airbnb of warehousing. We have yet to see companies like them move into our market. And we're still years away from seeing long-haul driverless trucks driving around on our interstates. Now, up top is clearly where all the activity is taking place in our market, so that's where I'm going to be focusing today. I always like to start off by discussing our industrial universe. What is it? What makes up our industrial universe? Well, it's properties that are used for data centers, warehousing, distribution, transportation, manufacturing, and contractor shops. Now in our market, our industrial universe is sitting at right about 24.5 million square feet. And I'm going to make a bold prediction. I think over the next 2 to 3 years, that number is going to supersede 30 million square feet. Now, who occupies this type of space? Is it owners? Is it tenants? Well, you can see here that the overwhelming majority of industrial space in our market is occupied by owners. They continue to dominate our market. However, we have seen a migration of regional and national companies into our market, and therefore I think we're going to see the blue piece of the pie right here expand in the years ahead. That's good news for landlords who are sitting on vacant space and are needing to backfill that space. So watch for that and to grow in the next couple years. Okay, shifting to new construction. For 3 continuous years, we've seen a drop-off in the total amount of square footage being built in our market. And I'll talk about that in a second. But I want you to focus in on this building on the left-hand side. That's Nordica Warehouse's new 200,000 square foot building that was built this past year up in Foundation Park. The one on the right is Boyer Ford Truck's new facility up along Benson Road. Now, between the two of these buildings, they've taken on more than half of the total new construction this past year. Now, I would be remiss not to highlight all the activity that's taking place down in the T, Harrisburg, and Brandon markets. And here are just a few examples of the buildings that were put up this past year. I want to focus specifically on the T market. You may have heard Braden talk about it if you tuned into his presentation about all the land transactions that are taking place out in particularly Baker Landing, which is a development right off the T exit. There were 7 total transactions in this development this past year. Why are people moving out into this area? Well, 3 things. Number 1, accessibility, visibility, and availability. The availability of land out in this development has created a lot of small business opportunities to come out there and buy small chunks of ground. Additionally, the visibility from the interstate is a huge bonus, and so is the accessibility to the interstate. So we'll continue to see a lot of new construction out in that area. Okay, transitioning to industrial property sales. You heard me a few slides ago talk about the drop-off in new construction we're seeing year over year. Well, that's directly correlated to this slide right here. We've seen a huge uptick in the number of transactions over the past couple of years. 62 total transactions equating to about $60 million in total dollars spent. And I'll talk about in my predictions where I think this market is headed. All right, some additional stats: net absorption and vacancy rate. The two kind of go hand in hand. Usually when there's a drop off in net absorption, we see an increase in the vacancy, and vice versa. As for asking rental rates, we saw about a 25-cent per square foot increase across the board for industrial leasing rates, and I'll highlight where I think that's headed here shortly. So the big question is, where are we headed? What's on the horizon for the industrial market? Well, we don't have to look any further than Foundation Park. One of the best kept secrets this past year was Amazon. They're currently in the ground putting up a nearly 3 million square foot multi-level fulfillment center, totaling about $200 million in total dollars. The Sioux Falls Development Foundation has set aside money to improve Foundation Court, about a mile worth of infrastructure. This is going to open up additional land that they've had out in the market for other companies to be able to take advantage of. Furthermore, they are doing a mass grading project, about 115 acres, to rough grade this land. There's a national developer that's looking to take about 56 of these 115 acres to put up roughly 500,000 to 750,000 square feet. And wind chill is already getting started on its third expansion in a few short years, roughly 130,000 square feet. And many of you have probably heard the recent announcement of CJ Foods, a South Asian food manufacturing facility that's going to be built on about 170 acres of that 450 you see right there. It's a $500 million project and is going to be about 700,000 square feet in size. Now, how did Dorothy say that in The Wizard of Oz? Toto, I don't think we're in Kansas anymore. Well, Sioux Falls, we're not little old Sioux Falls anymore. These are major projects within our market. And not only are they major projects within our market, they would be huge projects in Minneapolis, Des Moines, or Omaha. And that leads me into my predictions. New construction is going to skyrocket. Traditionally, what we've seen is right around 500,000 square feet year over year for new construction. Now we're adding millions of square feet to the market. Let me put that into perspective. We're going to be adding about 15 to 20% of our overall industrial universe in just a few short years. Companies such as Amazon and CJ Foods are overshadowing some other major projects that people aren't even talking about in town. Furniture Outlets is getting into the ground with a 400,000 square foot facility up along 60th Street North. You heard me talk about Wind Chill's 130,000 square foot facility. These are major projects for our market. Now, as far as lease rates and the price per square foot that people are paying, we're going to continue to see an increase in that arena, primarily driven by the lack of supply in the market and the increased costs of new construction. As for vacancy, 4% vacancy is a pretty healthy vacancy rate for our market and has been for several years. Sales transactions, I think, are going to remain stable for the most part. However, we will start to see a tapering off of transactions throughout the remainder of the year, primarily due to that lack of supply of available space in the market. And that leads me into my real estate cycle. I said it last year and I'm going to say it again this year. The industrial market is just the turtle in the race. It's been slow and steady year over year. The problem is it hasn't been able to figure out which side of the street it wants to be on. And so we continue to hover right between expansion and hyper supply. And really where we're at and what we've seen over these past couple of years is perpetual expansion. And that's where we're headed for the next couple of years. With that, I'd like to wrap up the industrial market report. Thanks for joining me. Should you have any questions, feel free to reach out. Thanks.